Hey folks, my name is Chris at HouseIt. I'm the co-founder here based in Miami, Florida. Today we're going to talk about an interesting topic that a lot of folks ask us about, especially if it's their first time buying a home, and that is when should you start the mortgage pre-approval process? Well, the answer to that is pretty nuanced because um, if you are fairly early in the process, we actually recommend not starting the mortgage pre-approval process at all yet. In fact, what you should do is you should start by speaking with a mortgage banker or two, perhaps someone affiliated with your normal bank, the place where you have your bank deposits and do business, and just ask for a mortgage pre-qualification first. And that's quite important because a mortgage pre-qualification you can typically get from any big bank with a 15-minute phone call with no document verification, and most importantly, no hard credit pulls. So your credit is not getting pulled. You're often on the phone with the mortgage banker, and they're taking your word for it, and you tell them. This is my credit score, perhaps a range, what your income, assets, high level basic information, and then they will essentially run those numbers through a calculator and give you a mortgage pre-qualification letter. So again, this isn't as serious or as vetted as a mortgage pre-approval letter, but the reason we recommend going through this route first is, especially if you're early, you primarily want to give yourself and your buyer's agent, if you're working with one, a sense of what your actual budget is. Right, so of course you can check out HouseIt's mortgage affordability calculator to give yourself a rough estimate as well. But it's sometimes comforting for folks to speak with an actual, mortgage banker or broker, and get a professional sense of what they'll actually be able to afford. And that is really the very important early on, especially if you're searching for different neighborhoods. You're not too sure on where exactly you want to live or what you want to buy yet. It gives you and your buyer's agent some comfort on what to actually zone in for. Now, once you're actually fairly set on buying a place, perhaps in the next several months, you're almost ready to make offers. You've perhaps gone to some open houses yourself, and you're like, I'm starting to get serious. Then it makes sense to get a head start on the mortgage pre-approval process. And it is important to time this right, because when you get a mortgage pre-approval, it is much more vetted and serious of a process, because you're actually giving your actual financial documents to the mortgage banker lender. For example, your W-2s, pay stubs, asset statements such as bank statements or credit card statements or an investment brokerage account statements and such. So they'll want to see actual documentation and essentially, begin to partially underwrite you. And and as they're doing this, they give you a pre-approval letter. So the reason this is important is when you're making an offer, and sometimes even if your buyer's agent is trying to schedule a showing for you, that's tough to get in, and they want to show you're serious. Well, it helps a lot for your buyer's agent to be able to say, hey, my buyer is pre-approved, very serious, and that demonstrates seriousness because you've actually given financial documents and been partially vetted and underwritten by a third-party financial institution. So it's quite real. Um, and it's especially important, of course, when you actually do submit that offer and you are requesting a financing contingency. You need a loan essentially to close. Then yeah, absolutely, it's important to at least have a pre-approval letter there, just to give comfort to the seller that, hey, this person has already spoken to their bank. It seems like they should be able to get a mortgage and such. So, how many pre-approval letters should I seek? Well, this is actually a great question. So, it is nice to be able to shop around. So, for example, if you're, working with bankers directly, so you're going direct to big banks and getting pre-approval letters from like Wells Fargo, Chase, whatnot. Um, well, it might be nice, we recommend, to at least check with two direct lenders. This way you can get an idea of what quotes are, making sure that, they're on brand in terms of being at the market rate. Oftentimes they'll offer to match the rates of any competing quotes you get, so that's a nice perk as well. So yeah, we always recommend getting two pre-approvals run, and a nice feature of getting sort of multiple pre-approvals done when you're more serious is, if they're done within a certain time frame, say like 30 to 45 days, when they pull your credit, do a hard credit inquiry. If it's for the same type of loan, like a mortgage, oftentimes when banks see that later, they see run through your credit report, and other lenders as well, they will often sort of file it together as one inquiry because they know that, hey, you're shopping around during this period for the same type of credit. So it doesn't really hurt you so much. Whereas, if you got a pre-approval very early on in the process, months and months before you seriously decide to start submitting offers and such. And then of course, you're going to have to refresh that. They're going to of course have to re-pull your credit months later to maybe get you an updated pre-approval letter. Then that might raise questions. Of course, you can explain it away as to why you did that, and that you didn't actually get any new credit, but it's just another question mark that might come up. So it's often better to wait and time it around the same time when you're more serious. So that's what we recommend. If you are planning on financing, it's always better to get a head start sooner rather than later, especially if say you are like kind of have a pre-qualification letter and the seller accepts your offer here in Florida, so they'll countersign the contract. Then the inspection period immediately starts. You have 15 days to do diligence on the building, do a home inspection, and then say that expires and you're locked in and you're like committed to the deal, but then you're only out per the contract is your financing contingency now. That may be say 45 days. Well, it just gives you less time to go through the hoops with your banker and get that pre-approval, to get a commitment letter by that 45-day period. Whereas if you had gotten a lot of the documents into your banker prior to all of this and gotten your pre-approval, and they're say 80% done with the underwriting, then as soon as you have that accepted offer, or in Florida it's a signed contract, then you can get a head start and perhaps get that commitment letter well before the financing contingency expires. And that's actually a tremendous comfort to have as a buyer, because if you think about it, we've seen too many situations where a buyer is a little bit behind on going through the movements with the mortgage, and the bank then has some unexpected delays, and say the 45-day, it doesn't have to be 45, it's negotiable, but say the 45-day financing contingency is about to expire, and say it expires tomorrow, and they still haven't gotten a commitment letter yet from their bank. What to do, right? I mean, do they really like the property? Do they cancel so they can get their cancel and basically ask for their deposit back because they say, hey, listen, per this tomorrow per this deadline, I'm unable to get a commitment letter, or do they waive the mortgage contingency by proceeding, right? Because they want the property, and the 45 days has expired, they don't wish to cancel the contract, they want to continue buying. Well, now they don't have protection from the financing contingency. And there is a risk that, hey, maybe for some bizarre reason they can't get financing. So we always think it's much better to get these things figured out the earlier the better, especially if there are quirks to your finances. For example, if you're self-employed, or you have some other quirks about your income or liabilities and such that banks might not be comfortable with, or they might get confused over. It's always best to get that stuff as firmed up as you can, as early in the process as you can, so you don't have any last-minute questions or hiccups. So there you go. My name is Chris at HouseIt. We hope you found this video helpful. If you did, please hit like or subscribe. Leave us a comment below. We'll get right back to you. And of course, if you're looking to buy or sell in New York or Florida, we can help you save up to 6% when you sell with our agent-assisted FSBO program. And if you want more help, we also have a 1% for full service listings program. And of course, when you buy, we can help you save up to 2% or more on your purchase with our HouseIt Buyer Closing Credit Program, where we give you 2/3 of the buyer agent commission. And we cover New York City, Long Island, Hudson Valley, and in South Florida, we cover Miami-Dade County, Broward County, Palm Beach County, St. Lucie, and Martin counties. My name is Chris at HouseIt. We'll see you on the next one.